Hi guys, Mark and Christina here to talk to you about the biggest mistakes we see most people make with their trading plan.
Over the years, I've had hundreds of conversations with you all on the phone about your trading.
And I've done hundreds of appointments with you going over your trading plans to make sure that you're on the right track. While doing this, we've noticed it seems to be the same mistakes people are making over and over again.
So in this training video, we're going to show you what we believe are the 3 biggest mistakes people make when learning to trade. But before we get started, there are a couple of initial slides we have to do first.
The information presented in this video is for general information purposes only. Your personal objectives or financial situation or needs have not been taken into consideration. Accordingly, you should consider how appropriate the information is for your own personal objectives, financial situation and needs before incorporating it into your trading plan. By assessing this video, you're deemed to have read and understood this disclaimer. If you need a little bit more time, push pause on your video. Remember, past performance of this product should not be taken as an indication of future performance. Caution should be exercised in assessing past performance. This product, like all other financial products, is subject to market forces and unpredictable events that may adversely affect future performance. Remember, there's a risk of gaining money every time you take a trade, but there's also a risk of losing money every time you take a trade. We are trading futures utilizing margin. Margin is defined as the trading of securities with borrowed money from a broker. This has the effect of allowing you to trade a larger position in the market than you would otherwise trade based on your account balance. This has the potential effect of magnifying any profit you make from the trade, as well as the potential effect of magnifying any loss you make on the trade. This is why the term high level of risk is used to describe futures trading. A degree of leverage can work against you as well as for you. Before deciding to invest in any futures trading products, you should carefully consider your investment objectives, level of experience and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all risks associated with futures trading and seek advice from an independent financial advisor if you have any doubts.
The first thing we want to remind you of is that we have been on exactly the same journey that you have. The mistakes that we are going to go through in this video, we have been guilty of ourselves, and it's only been by making these mistakes that we've learned how detrimental they can be to our trading. Remember, like you, we weren't born traders, and being human beings, we have had to learn everything the hard way as well.
The first mistake I see people make is probably the most surprising for me. The reason for that is, before I even signed up with IDTA, I saw Lockie talking about it in the intro boot camps. It's also talked about in the 101 training course, the weekly trainings, and we even teach it in the accelerator course. And yet out of the hundreds of appointments that I've done going through traders' trading plans, and despite all this constant publicity, nobody has ever done this the way that it's taught. What am I talking about? I'm talking about chasing one rabbit.
Does this sound familiar, guys? One market, one time slot, one pattern, 100 trades minimum. And we think 200 if you're in one of the really fast markets like the FDAX. And why is that? Because you need to know that when you open your live account and start trading with real money, you know your plan inside out.
Yeah, there can't be any hesitation when you see your trade appear. You need to be able to recognize it immediately. You know how to enter it, you know how to exit, and you also know your enemy drill if you need to exit early. This takes long enough to learn when you're doing one market, one time slot, one pattern, so it's going to take a ridiculously longer time if you start trying to learn it, trading across multiple patterns, multiple markets, or multiple time slots.
Now, I know there are a number of you out there who have told me on the phone that it takes too long to get 100 trades on one pattern, or there isn't enough profit in one pattern. So let's talk about how to become profitable trading. It begins with just focusing on your first goal, which is mastering one pattern. Remember, one of Lockie's favourite sayings is go slow to go fast. This is a really serious business, and like any new business venture, the top dollars don't come straight away. You have to do your apprenticeship first. So your first task is to prove you can trade one market, one time slot, one pattern in sim before you can move on to the next step. Now, for some of you, this may mean you can go live at this point, depending on the market you're trading, the frequency the trade occurs, and your personal goals. We have a perfect example of this coming up for you. This probably is going to be nowhere near enough to reach the final goal you have for yourself trading, but it is a critical first step and you have to start somewhere. And as Mark said earlier, in all his hundreds of appointments, he has never seen someone come to him with 100 trades of the same pattern in one market and one time slot. Think about that for a moment, then think about where you are on your trading journey. Remember, when you first go live, you may only be making $50 per trade. And this is absolutely fine. Again, remember the saying, go slow to go fast. $50 a trade on one contract is $500 per trade on 10. So why is everybody trying to shortcut this process?
Let's use a real life example. You go to the doctor one day and you find out that the doctor thought he was so clever that he only needed to do 2 years at medical school. How comfortable would you feel going to that doctor knowing that he's shortcut the whole process? Trading is no different. It's a skill you have to learn, and it's best learnt in stages, one stage at a time. If you don't learn one pattern thoroughly before you move on to the next one, you've made no progress at all, and you're just adding another level of confusion till you're already unsuccessful trading.
We still use this principle in our own trading. Back in May last year, Mark and I decided to look for a market we could trade in the middle of the day. And because we've never traded this time slot before, we had to do our 100 trades minimum before we could start trading live. For the first week or so, we just watched it without actually trading, and we also scrolled back through the previous few months. And just by looking at the candles, we could see basically every day at least one reversal pattern set up. So we decided to do our 100 trades using Basic 101 teachings and only trade the reversal pattern. And here are the results. So this is what we did to prove we could trade this new market successfully. It's exactly what we've done for every market, time slot and strategy we currently trade live. We chase one rabbit and we never go live without logging at least 100 trades. These are all 101 reversal patterns meeting our trading plan. But remember, this is our plan. Yours will likely be different.
So as you can see, we had 695 ticks worth of profit, 411 ticks worth of losses, and that gave us a profit of 284 ticks. On one contract, that's $1,775 US. Our win-loss percentage was 64%. Now you may be wondering about the 64% success rate on this trade. When you're trading a reversal, you're typically trading against the trend, so it's likely to have a lower success rate than a buy switch or a continuation trade. This is why in my trading plan for this market and this time slot, it's important that I keep this trade to a minimum 1-to-1 risk reward to keep the profitability ratios right due to the lower probability of the reversal trade.
This is also why we built the trading risk reward versus profit calculator, so you can ensure that your trading plan is profitable. Hopefully you've been able to incorporate using this calculator into proving your own trading plan.
So traders, my question to you all is, who's actually done this? Those of you that have gone live and aren't meeting with a whole heap of success, did you actually do this thoroughly before going live? As I mentioned earlier, out of the hundreds of appointments that I've done meeting with traders and going over their trading plans, nobody has actually done this. If I go through the trading plans, at best, even if I find 100 trades, I'll find multiple patterns across multiple time slots and multiple markets. So if you look at what I've done here, this is my trading plan for a reversal pattern, exactly how I traded it consistently for 100 trades. So I know I can trust my results and move forward.
So let's start up NinjaTrader and have a look at what some of these trades look like in the charts.
Right, so let's get into the list. The first trade was on the 23rd of May, and it's a reversal short. So I'll just draw it in. Here we have the sellers pushing in, buyers push back, and the sellers push down and close below the breach point. So here goes our breach point right here. Our stop loss will be back behind the buyer failure point, and our entry at the close of that candle. So putting our target down, if we want to go 1 for 1, there goes our target. So now we wait. Now on this first trade, as you're going through, if you see any of the other trades or check them out, you'll notice this didn't get through to the target before it got to 4 o'clock in the afternoon. Now I have given myself a limit on this trading session that I don't want to be trading after 4 o'clock. So basically at 4 o'clock I get myself out. That's why the trade on this one here went through to 12 ticks, because that's down here on the 4 o'clock candle. And as you can see, it's still milled around. We found that it does seem to go very docile over this period. You can sit for hours for no reason, so that's why we're getting out around the 4 o'clock mark. Now if we look at the next one, there was no trade on the Wednesday. Now you'll quite often find that. Some days you get no trades, some days you'll get multiple trades. That's just the nature of trading. So we go through to the 25th. And this time we have a reversal long. So we'll draw that in. Buyers push in. Sellers pull back, give us our sequential failure. Buyers push in again and close above the breach point. The breach point, of course, is right here. Stop's going to go down below, and this is our entry point. So if we look at this trade as a one-to-one from there to there, our target is going to be up here. Now we can see, without scrolling further forward, this wasn't one of our better days. Nice reversal pattern, only gone 3 or 4 ticks before it's turned around and stopped us out. So that was a losing trade on the Thursday. So let's look at the first move on Friday. Now this is going to be one of the greatest learnings for this session. It's something that I've very rarely ever seen traders give conscious thought to before they go live. So if you haven't started already, you may just want to take some notes on this one. When we come up to a trade, the first thing I ask myself is, does this trade make sense? So let's look at the first reversal on Friday. Sellers push in, buyers push back, sellers push in and give us a great reversal pattern. There goes our entry point and our stop point. And at 1-to-1 we can see that this trade paid nicely. Now with the advantage of hindsight, this would have been a great trade. However, I want to have a look at this trade in a bit more detail. If we go back to the beginning of the day, which is 10 AM Kiwi time, you would see that we'd basically been in an uptrend with 4 legs to the upside since the open. However, at 12:45 we had to make a decision whether or not to take this trade. We didn't have the benefit of hindsight, so this is all that we would have seen. Leg 1, leg 2, leg 3, leg 4 on the way up. Then we would have seen what looked like the beginnings of a really nice reversal until the reversal closed right in the middle of the MDI. So what did that mean? It meant we had a really good complex retracement. So we could be expecting the trade to go either up or down. So on my trading plan, this is called a 50-50 trade. So what does that mean to us? Well, to see, let's take a look at this on the Trading Risk, Reward versus Profit calculator, which you should all be getting fairly familiar with by now. Just select the market, 6J, change our winning percentage to 50%. We know we got about 30 trades, so let's just have a look at this. Whoops. Now, if we want to go at 1-to-1, we need our stop loss and our profit target to be the same, and we know from the spreadsheet that 10 was probably about an average of what we saw those trades being. So we come down to the bottom and we see our profit sitting here at 0. Now this isn't taking into consideration any contract fees. If you're averaging roughly about $5, that means there's $150 worth of fees, so you've actually made a $150 loss. So you can see why I've left this trade out of my trading plan. For it to be a profitable strategy, I'd have to be taking this trade at between 1.5 and 2-to-1 risk-reward ratio. So let's have a look at this on the calculator to see what would happen. So if we're leaving our stop at 10 and we increase our target by 50%, we can see that suddenly, even with $150 worth of contract fees, we're actually getting into profit here. However, over 30 trades, you probably want it to be looking a little better than that. So if we take that up to 20, you can see that's looking much more like it. Now from what I can see, I don't think I've got much of a chance to be that consistent and hit a 20 tick target on this market. So that's why I let this trade go. So let's take a look at the next trade now. The buyers push in, sellers push back, buyers come back and close above our breach point. So there goes our breach point. We've closed above it. There goes our stop position. Use the right line. And our entry point. Figure out our target, and nice trade. There goes our target. Nicely hit on the Friday. So now we go through to the Monday, which is the 29th. And we have a reversal short. There goes our breach point. Stop loss position back here. And our entry point there. Now if we look at where the target was, one of the things that we have is an enemy drill, and one of my enemies is a triple bottom like this. So basically after the triple bottom, you'll see there was a 0 on that one. I bought my stop through to break even, and you can see that it went back to break even. Now if you didn't have that as part of your enemy drill, it depends on how far back you put your stop loss, and with each different market you'll probably see in the trainings it's between 2 to 4 ticks. So if you were at 2 ticks, you may have been nicked out here. If you were at 3 ticks or 4 ticks, you would have still been in the trade, and it did go through to profit. However, my enemy drill forced me to bring my stop loss up, and that was a 0 trade. Then later on, we have another one. There goes our breach point. This time we've got a backstop of a triple stop. And our trade, of course, entry is at the bottom of the candle, following the breach point. Target 1-to-1, and that went comfortably through the target. So this is how I trade the 101 reversal pattern. Most of you know this is my favourite pattern, especially when it completes a buy switch at the same time. It took over 3 months of trading to amass this data, so well done to all of you who are completing your trading preparation this thoroughly. For those of you who aren't, I can't recommend strongly enough that this is the barest minimum you need to do to prepare yourself to go live.
As I said earlier, some people complain it just takes too long to get to 100 trades in Sim, and the result is they get impatient. Then we see them start adding more signals and time slots to try and speed the process up. In reality, they're slowing things down, trying to focus on learning too much at once. There's 3 ways you can get your trades up. The first one is simply scrolling back in the chart each day and see what patterns you can spot. While this is useful to help you learn to spot your patterns, it does nothing to help you learn to see your patterns as they unfold in real time. You need to practice watching the price action as your trades form so you get really used to entering them the way you have to when you're live. This is hindsight trading, and we all can be expert hindsight traders, right? So while this is great to do to help you recognize the patterns, we place 0 value on this method when it comes to racking up your 100 trades. The second one is live market replay. Using live market replay is an awesome tool, and it allows you to practice when your chosen market is not available, like on weekends. The problem with it though is that people fast forward it, and again they miss out on learning the price action and behavior of the market, which is just as important as learning to identify the pattern itself. So the third method, actually sitting and trading the market live on a sim account, is by far the most preferred method, and the method we believe you will get the most benefit from. Trading is a difficult skill to master, and there are no shortcuts. You can only do it by spending time in the markets and practicing it without the hindsight of knowing what candles are ahead.
Mistake number 2. Let's look at the consequences of even the tiniest change in your trading plan. It's amazing when you go to all the trouble of trying to get through 100 trades, and as you saw from the previous schedule, it can take months to actually achieve that. Then you go and change your trading plan halfway through, so none of the data you're actually working on is valid. You then need to go right back to square one, trade one, and start all over again. So let's go back to the previous trading plan and make one simple little change to see what happens. So here it is. Because we had this so well documented, we can easily go back and see what the impact of the change would be. Let's add the direction of the 15-minute MDI. And here's the result. As you can see, we now only have 63 trades. We've lost 37. If we look at our win-loss percentage, it stayed about the same, but we've lost 64 ticks, which is 23% of our profit by changing the trading plan.
So you can see how critical it is that you're consistent with your 100 trades while proving your trading strategy. Then when you go live, you must stick to this plan. We have lost count of the amount of people who, after we've pointed out a flaw in their trading plan, have said to us, "But I'm going to change this when I go live." And then they wonder why they get a different result. We have even seen some traders totally change their trading plan after only 1 or 2 losses. Guess what, traders? There will always be losses. Welcome to trading. So the point of practicing your trading plan in Sim so thoroughly is so that you know the percentage of losses to expect. So when they occur, you can be mechanical and move on to the next trade. This is the successful implementation of a great trading plan. And we get it. You're halfway through your 100 trades and realize it's not going well and you need to change something. But the thought of having to go back and start all over again is not something you want to contemplate. So you change your strategy and just keep going to 100 trades anyway. So then when you go live, you only have 50 trades. And guess what? The previous 50 trades are now worthless, which means you're now trading an unproven strategy with live money. Trust me, taking shortcuts can only end in tears. This brings us to mistake number 3, mixing up trading systems, then trading the unknown. This is one of the main causes of mistake number 2, being consistent with your trading. It seems to be human nature to believe that things are always better for others, and if somebody is doing something different, you perceive that it gives them an advantage over you, whether it does or not. Even horses always think the grass is greener on the other side of the fence. Everyone has their own trading journey, and you have to spend a lot of time to get your trading plan successful, and so does everyone else. And because there are so many variables, it's unlikely your trading plans will ever be identical.
It became very apparent to Christina and I when trading together that we can trade the same plan very differently. What we mean by this is that although we've tried to trade the same plan, we've both had very different trading journeys, and so sometimes see the charts slightly differently. We can have different entry strategies, different exit strategies, and sometimes one of us won't even take a trade which apparently meets the plan. If you look at your own trading plan, it'll probably be different to ours as well. Even though we've all done IDTA's basic 101 training, there's bound to be details that you perceive slightly different to us, which will then give you a different result. This might be a fib you use, a minimum PVI level you don't trade, the significance that you give to certain brick walls. Get the idea? And on top of that, there are some trades that we just actually missed. Those of you that have spent hours sitting behind your computer will understand this. You sit there waiting for your trade to appear, only to have a moment's inattention which causes you to miss the trade entry. That's trading. We showed you in mistake number 1 how well the basic IDTA system works, and we only took a simple 101 reversal pattern. You've got the figures, go back and verify it for yourself. So here we have the IDTA trading system. Some of you who have done Platinum or TBS will have seen charts that Lockie has shown that date back over 7 years with the same system working back then that we're using now. IDTA's system has been designed with indicators to work synergistically with each other. If you go onto the internet, you're going to find hundreds, if not thousands, of trading systems. They all have their own indicators as well, and strategies that are designed to work with each other. So this is what we see people doing. They're surfing the internet one day, or a friend mentions that they're doing something which leads them to the cat's meow trading system. And something within that system catches their eye. FOMO kicks in, and so they decide to include it with the current system that they're trying to prove because they perceive it to be better than what they're currently doing. Unfortunately, they don't recognize that by combining the two different trading systems, they've just invented a brand new system. Totally unproven, that will require far more work to get profitable. They don't even know if it's going to work. And this means starting from scratch, retesting months of data to see if it even does.
Now, I know it can be hard seeing all the spam and emails promoting trading systems that constantly clog our inbox. If you start reading them, they all look like the holy grail of trading. And I know for me that for just a moment I catch myself falling into the trap of being human and questioning, could this be better than what I'm doing now? But then I put on my trading mindset and remind myself that I already have a successful trading system, so why on earth would I want to start all over again? If I'd acted on even a fraction of the emails I saw, or every time I heard someone comment on something they were doing that they were really excited about, I would have never made it live and would have lost count of how many times I would have had to go back to square one and start all over again, day one, trade one. This has been a huge lesson for me to learn, and I see and hear about it almost daily within the New Zealand trading community, where our traders are constantly being derailed by the next bright, shiny object. And the biggest setback here is that if I had gone ahead and combined trading systems to make something totally new, I then have nobody to turn to get help. Because it's all new. Nobody has proven what I'm doing, and so I'd be on my own. So now on a serious note, you have to turn off when others talk about their trades or brag about their trading strategy, as it is almost certain it will not be exactly the same as yours. Remember, their trading journey is different to yours, so their results will be different. If you're going to surround yourself with other traders, you have to be prepared to combat emotions like FOMO and jealousy constantly. I mean, let's get real, guys. Who has felt these emotions since they started trading? And which side of the fence have you been on? Remember how excited you get after a winning trade, even if it's only in sim, and you want to tell everyone about it? Have you ever told someone about how you got great results and convinced them to try it? You may have had the best intentions, but if they follow your advice, you have just caused them to have to start practicing all over again. And unfortunately, most won't, which is why so many never find consistency. On the other hand, have you heard a fellow trader get an awesome result and then asked them what they did and decided to incorporate that into your trading plan? Again, you now have to start all over again. With the amount of variables that can occur in trading, honestly guys, this could mean you could spend years trying to become a successful trader. This isn't just isolated to learning to trade. The same goes for studying anything. My partner's currently doing a master's at uni and said to me one day that he was really struggling to find a topic for his final research project. He spent weeks going through articles, collecting them, but couldn't decide on one or the other. Frustrated, he went to his lecturer for advice and was told now was the time to stop reading. He knows everything he needs to know to complete the project he just needed to get started. The same goes for trading. So here's a challenge for you. Get started on your trading plan. Stop thinking you need more tools or more learning. You have everything you need to know in the IDTA training course. And some of you have already learned everything you need to be successful. Pick a time slot, pick a market, pick a pattern, and just do your 100 trades and don't let anything distract you.
Remember the example of the doctor we talked about? If a doctor decided they would only do 2 years study because it was too hard to do all the rest, And anyway, they thought they could just copy the other doctors and learn on the job as they went. Do you think they would ever actually be a competent doctor? This could never happen in the real world, but it happens in trading every day and is probably why so many people fail. If you've applied this attitude to your own trading, which a lot of people seem to do you think it's a great strategy? And how's it been working for you so far? At some point, you have to stop being distracted by others and take responsibility for your own trading plan. You must prove a consistent plan or you will never get any trading consistency or make any money trading.
So guys, that's the 3 biggest mistakes we see people making. We really hope you found it helpful. Remember, if you have any questions about your trading plan or your chosen trade, IDTA have a fantastic support system in the members area where you can upload your screenshots and get all your questions answered by the experts.
We deliberately selected what we believe was the easiest of the IDTA 101 patterns to identify to show everybody that the basic 101 system really works. Our challenge to you is to now go back into your chosen time slot, remove all the distractions coming at you from all directions, do your 100 test trades, proving that you can trade your system successfully, finishing your apprenticeship in Sim so you can finally go live and make some money.